Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. TWR Tech video. Stay tuned at the end for TWR Hot Products and Services. The tech video is going to cover trading market gaps. And basically, it's going to go over what are these, why do these happen, and how to take advantage. So first thing you need to understand, in volatile markets, traders can benefit from large jumps in asset prices if they can be turned into opportunities. Gaps are areas on a chart where the price of a stock or other financial instrument moves sharply up or down with little or no trading in between. As a result, the asset chart shows a gap in the normal price pattern, and the skilled trader can interpret and exploit these gaps for profit. Now, this video isn't going to give you that secret sauce for gap trading for huge money. In fact, you'll have to take the TWR Gap Trading 101, Destroying Gaps to Destroy the Market, on 25 June 2023 at 1 p.m. Central Standard Time. But this video will give you the basic understanding of why gaps happen and how they can create huge profits. And in case you're interested on the gap trading video, guys, here's the flyer. We're going to do it again, like I said, 25 June, 1 p.m. Central Standard Time. $15 gets you a seat, and every purchase gets the recording. The link is in the description, or you can always go to traderswarroom.com/upcoming classes and get spun up on all the upcoming classes we have available. Now, getting back into the main part of this video, so what is a gap? Well, a gap occurs when the price of a security moves quickly through a price level, either up or down, with little trading or price available over that time span. As you can see in the picture right there, you got a gap down from candlestick or price action, right? And you get some gaps up. It depends on the price momentum and the volume momentum that's going with the trending stock. Now, what causes gaps? Well, they can be caused by several factors, but they are mostly seen as a result of unexpected news or a technical breach of support or resistance. So basically, you're looking at some sort of catalyst or a TA breakout or breakdown. On the fundamental side, the news could be a company beating earnings estimate by a large margin, or a speech by a Federal Reserve official impacting interest rate expectations. On the technical side, gaps can ensue following the break of a prior high or low, or other form of a technical resistance or support, such as a key trend line. And you can even add patterns in there, like a cup and handle, or a triangle or a wedge, something like that from a TA standpoint. Now, they occur because underlying fundamentals or the technical factors, we just went over that, and give you an example. If a company earnings are much higher than expected, then the company's stock may gap up the next day. This means that the stock price opened higher than it closed the day before, thereby leaving a gap. To put it in perspective, all you really have to think about is NVDA recently, all right? That move on that absolute catapulting earnings that it had went to the stratosphere. And so when you're talking about things like that, that is creating that gap up the next day. Now, gaps happen in all sorts of markets. So in the Forex market, it is not uncommon for a report to generate so much buzz that it widens the bid-ask spread to a point where a significant gap can be seen. Similarly, a stock breaking to a new high in the current session may open higher in the next session, thus gapping up for technical reasons. Now, automated program trading, such as Algos, is a relatively new source of gap price action, but it is gaining a lot of steam because algo trading takes out the emotions of sentimental trading. The algorithm might signal a large buy order if, for example, a prior high is broken. The size of the algorithmic order may be such that it triggers a price gap, breaking above the recent high and drawing in other traders to the directional movement. Now, you see this a lot in penny stocks. because they push, 25, 50%, and then that gets other people interested in them. And then all of a sudden, next thing you know, you got a stock that was 14 cents pushing all the way up to, 50 cents, even 75 cents. And now you got an astronomical type percentage that's pushing. Now, gaps can be classified into four groups, and these are all just opportunities waiting for you to take aim and go destroy the market. Breaks, all right? These can occur at the end of price patterns and signals and beginning of new trends. Exhaustion occurs near the end of a price pattern and signal a final attempt to hit new highs or lows. Common cannot be placed in a price pattern. They simply represent an area where the price has gapped and runaways. These occur in the middle of a price pattern and signal a rush of buyers or sellers who share a common belief in the underlying stock's future direction. A trend. Now, the age-old saying, to fill or not to fill, right? When someone says a gap has been filled, this means that the price has moved back to the original pre-gap level. These fills are quite common and occur because of the following examples. Irrational exuberance, all right? The initial spike may have been overly optimistic or pessimistic, therefore inviting a correction. Technical resistance. When a price moves up or down sharply, it doesn't leave behind any support or resistance. Price action. Price patterns are used by classifying gaps and can tell you if a gap will be filled or not. Exhaustion gaps are typically the most likely to be filled because they signal the end of the trend or continuation breakaways. These are less likely to be filled since they have to be confirmed with the direction of the current trend. Now, those of you that follow me, who has heard me say, we're hitting either buy or selling exhaustion? And now you know why. When gaps are filled within the same trading day on which they occur, this is referred to as fading. For example, let's say a company announces great EPS for the first quarter, right? And it gaps up to the open, meaning it opens significantly higher than its previous close. Now let's say as the day progresses on, people realize that the cash flow statement shows some weakness, so they start selling. Eventually, the price hits yesterday's close and the gap is filled. Many day traders use this strategy during earnings season or basically just other times when irrational exuberance is at its peak. Now, how do we play the gaps? Well, there are many ways to take advantage of these gaps, with a few strategies more popular than others. Some traders will buy when fundamentals or technical factors favor a gap in the next trading day. For example, they'll buy a stock after hours when positive earnings are released, hoping for a gap up the following trading day, if it hasn't already happened in after hours trading. Traders might also buy or sell into highly liquid or illiquid positions at the beginning of the price movement, hoping that the gap will be filled and continue the trend. Swing trading option people favor the liquid stocks. That's why we always say high volume, high liquid stocks. So let's expand on that a little bit more. For example, they may buy a stock when it's gapping up very quickly on low liquidity and there is no significant resistance overhead. Some traders will fade gaps in the opposite direction once a high or low point has been determined, often through other forms or technical analysis. And this one that we just went over, the opposite direction, is my preferred method when I'm playing the reversal off of gaps. Now, if a stock gaps up on some speculative report, right, experienced traders may fade the gap by shorting the stock, essentially buying the rumor and selling the news. And finally, traders might buy when the price level reaches the prior support after the gap has been filled, a play on supply and demand zones. Now, here's some keys to success that you need to remember when trading the gap, all right? Once a stock has started to fill a gap, it will rarely stop because there is often no immediate support or resistance. So gaps happen and gaps will get filled. You see it all the time. Exhaustion gaps and continuation gaps predict a price moving in two different directions, so be sure to correctly classify the gap that you are going to play. Retail investors usually exhibit irrational exuberance. However, institutional and algorithmic systems may play along to help their portfolios, so be careful when using the indicator and wait for the price to start to break before taking a position, and make sure you're watching the volume, because high volume should be present on any type of breakaway gaps, while low volume should be present on exhaustion gaps. So, how can you take advantage, right? Well, by definition, gaps occur quickly and without notice, making it difficult to position in advance of a price gap. You might be lucky and long a security and it gaps higher, leaving you with a quick profit, or vice versa. The other approach is to enter the market in the direction of the gap as is potentially moving, and to close the gap, basically following the trend or going into strength or weakness. If the gap is sustainable, then the gap price level zone should provide an opportunity to get in on the directional move of the gap for a better price. Now, what happens when the gap is filled and the price keeps going up? Well, when the gap is filled and later surpassed, it's a strong signal that the gap was unsustainable in the first place, or news emerged indicating that the gap was in the wrong direction. In such an instance, you may consider taking the opposite position than the gap suggested. For example, let's say the stock has gapped to the upside through a significant prior high. Normally, you would look to the buy if the gap is filled and the break price level holds. However, if that level is surpassed to the downside, you might want to go off of a false break and exit longs and take a short position following the upside rejection of the price movement. All right, so wrapping this video up, right? A gap occurs when the market price of a security jumps to another price level, either higher or lower, when where little, if any, trading has taken place. A good example is an unforeseen comment from a senior Fed official regarding the direction of the interest rates, and once the comment hits the newswire, markets may react immediately, with market makers pulling their bids and offers, and this may cause the price jumps. And all you got to do is really, to understand this, is look back at the chart for NVDA and you will see what I'm talking about. Gaps are frequently seen in price charts of almost every security, and in stocks the most frequent and significant gaps occur between the daily close and the open of the exchange. In Forex markets, since they operate 24 hours a day, a gap may not be visible, possibly on a 1-minute chart, but instead appears as a very long candlestick covering the gap in the price. FX markets may experience gaps over the weekend between the Friday New York close and the Sunday Asia open, and price gaps can bedevil investors, especially if they're on the wrong side of the gap. So, while gap trading can benefit huge with enormous gains, they are not without normal risks associated with trading and investing, and TWR is always here to give you that community of like-minded traders and investors so that you are not alone in your trading journey, all right? Head on the swivel, always looking for the attack to destroy and conquer the market, and as always, let's go to war together. Upcoming events. Our next class is set, guys. On 11 June at 1 p.m. Central Standard Time, TWR is going to teach you Sports Betting 101, how to pick and bet the winners from the losers. Our instructor, Tech Bets, is the best analyst you've never heard of. He's the total package, guys. He has a great win percentage, great picks, and great knowledge. And he's only on TWR. He's going to teach you the basics and the strategy that makes bank betting on live sports. So, sign up today right there at traderswarroom.com/upcoming classes. And as always, the link is in the description. I will see you there. And then we got a new flyer. Of course, it looks different than the last one. But following that class on 25 June, we got the TWR Gap Trading 101. I'm going to teach you guys how to destroy gaps to destroy the market. This is going to happen 25 June at 1 p.m. Central Standard Time. $15 gets you a seat, and everybody gets the recording. Of course, same thing like the last class. traderswarroom.com/upcoming classes. You can sign up right there, and that link is in the description. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this? Or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war. Join the TWR Investment Club. Are you tired of trading alone? Losing more than you're winning? Or are you just too busy with work, family, and life to focus and hit the market bullseye? If that's you, then join the TWR Investment Club. We trade the account for you and then pay you profit and loss distro. We run both a 30-day and a 6-month club. The next club round starts 1 June, and the link to join the free chat where you get all the information is in the description. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone, every budget, and every style. Join TWR today and trade with the bulls. The market is our war zone and stocks are the battle. Join TWR and let's go to war.